Thank God it's Monday. TGIM. Doc here from North America. Another fun-filled day. I think I'm happy because I'm sitting and not vibrating. Doc was on the tractor for like a day and a half and trying to get a lot done before everything really became too far. So I was achy breaky, man. It was like a country western song. I was all kinds of sore. But anyway, today's a lot better, and I'm glad I'm just sitting here trading instead of farming. Yes, indeed. I guess we are migrant labor here. What we do is we pick money. Yeah, I like that a lot easier than being up on a tractor. Alrighty. Colloquial. Akko. Hi, how you doing? Just another fun-filled day, another fun-filled week. Here we roll. For some of us in the southern hemisphere, it's already like heading for Tuesday. So they really had a TGIF, and here they are back to a TGIM. Thank God it's Monday and it's already done, and they're having their cocktails. I like that too. All right, what do we got going on today? Let's take a look at it all. I mean, to the great extent, the equity markets they started off hard down because believe me, I was sitting here sore looking at them at the opening, and boy was I achy. And they knocked it down, and then they just marched it right back up again. So I keep on seeing headlines. We talk about it here. We've been talking about it the last couple of days about value investing and quantitative value investing, and how most of the value investing that goes on nowadays is very old-fashioned, very irresponsible. It doesn't adjust for volatility of the 1980s and the 1990s and the 2000s and 2010s and 2020s. That the type of investing that we see in the headlines almost every day is kind of talking about the 1960s and the 1940s and the 1920s and the 1870s, that type of thing. They don't really they're not really looking at the modern market. Like I see these headlines and it says let me throw a headline out there at you. It cracks me up. I see it and I shake my head at it. It's like I'm going into some of the financial headlines that I see out there, and one of them is like S&P futures storm. Okay, that's okay there. About let's see. Oh yeah, here it is. Here it is. The stunning charts blows up modern central banking, or is the bull market decision time? Markets has reached maximum stupid price. You know what? If the market's reached the maximum stupid price, and you have a portfolio, then throw on collars. Just use simple free options. Insure your portfolio. The worst case scenario is you make money. Or let's put it this way. You lose so little that it's irrelevant, but they have these headlines like as if the world is going to come to an end. So you go sell calls, buy puts, and sit back and have a pina colada. I mean, honestly, I don't, these headlines are like as if they don't understand investing, and they don't understand financial tools. It's like I don't get it anymore. I could put up with this in the 80s and the 90s and maybe the turn of the century, but here we are. It's 2020. It's like, guys, gals, hedge yourself. Do you drive a car without insurance? Do you have houses without insurance? Do you have apartments without insurance? Do you have life insurance? Health insurance. Come on. Insure your portfolios. What is this panic stuff going on? I just see it over and over with the headlines, and I'm really doubting. And then they try to confuse the person who's trying to day trade. That's the other part. By all these ridiculous headlines, all they do is they just confuse the physical reality of actual markets today. That's all they're doing. They're just confusing that physical reality. They're making it harder and harder for people to understand how markets function anymore. Value investing, so forth and so on. Alice. Oh, I like that. My system does no opens .jnlp file that I don't downloaded to run Visual J4X. J4X Java exits with no reason. I reinstalled the Java and it does not fix the issue. How shall I fix this? Interesting. Let's see. What is your problem? My system does not. Oh, it's not opening itself. And you just reloaded your J4X and you redid your Java. And you got the password right and all that stuff, right? Maybe a firewall is blocking it. Check your firewall. Could be that. You know what I mean? Oh, are you running the automated system? Are you doing a contest? Are you doing the contest and trying to use the automated system? Alice. That sounds like it. Hey, Dave, how you doing? Didn't think I was going to be doing J4X answers, but it's okay. That happens with my robot on J4X also. Does the same thing. It kicks off. Oh, let's see now. You can see here we got the euro there. If anybody has any market questions, we can get into those. You can see there's the euro had swung about 5 or 6 pips since we started the webinar, maybe a little bit more than that. We're in a weekly buy in our algorithm. You can see J4X. The solid line is heading down. It's below the other 2 lines. You can see so there's some weakness trying to come in here at the moment. You can see that right there. I wish I could see where 54 said what he was looking for. I think he was looking for, was it the 111.20 area? Was that what he said last Friday? I guess we could go look at the video, and that might show us. I think he was looking for something like that. Or 112. I remember relating to it in the sense of we were looking at highs and lows. So I was saying like, oh, you're picking this area here. This could be it. I think that it probably hit where 54 was looking for some resistance. Ourselves, you can see we are climbing with our algo. Good old Chicago Quant algo. Doc's old algo is now licensed to Chicago Quant. And so we call it the Chicago Quant algo. And you can see here it's marching along on the upside here, a little dipping down, but then I guess someone's got to take some profits, right? I mean, if you're making money, don't you want to sell some of it and take some of the profits and go buy a milkshake or a Ferrari or do something? I don't know. Let's see. Right here you can see the weekly's fine. Went into the weekly buy back in here on the 22nd. And you can see J4X is seems like they're trying to go after this area here where the line is, playing with that range. Now I don't think they're buying euros because they see Europe much better off than 3 weeks ago, but that's exactly what's happening. Money is coming in, and we'll see what they do with it. I read a really strange story about zero interest rates and the mindset behind that at the central bank, at the Exchequer in London, and at the ECB in Brussels and so forth, and the SNB, the Swiss National Bank, that type of thing. What was the mindset to have 0 interest rates and minus interest rate? Minus interest rates are the bigger one. That's the one that really makes things. Did it? Here's a wonderful question and conversation point, and that is, did the 0 and minus interest rates lead to crude oil in May going to minus? In other words, would it have ever gone minus if they weren't doing minus, trillions, not billions, trillions over in Europa? What's there, 14 trillion across the planet now in minus interest rates? So they're not just 0, they're below that. And so I guess money felt comfortable enough to drive oil, to get out of their position into the minus. Is that like a psychological building, where it, after a while, money goes, oh, well, what's the difference? I pay 0, I have to pay to just have my money sit in that position. So if I need to get out with, take a $30,000 or $40,000 hit, just to get out of the position so I don't take a $90,000 or $100,000 hit, I think I'll do that. Now that's obviously a good stop loss, of course, but I think I would have waited for the plus side myself. I would have not even allowed it to get to the minus. The moment that it even remotely played with zero, I think it would have been gone. I mean, what a tip off, especially with the exchange putting out a warning that it had the potential to go minus. It's like, I don't think I want to participate in anything that has that potential. So, don't. I mean, it's one thing to be standing in a trading pit and doing that 30 years ago, but to be electronically trading, the next thing you know, Billy Bob hits the pole, the electric pole nearby, and with their backhoe, and the next thing you know is we're out of internet for a few minutes, and here I'm sitting there minus. So it's something to think about, and the psyche of it, because people are being programmed to take that type of risk. So, all right. If no one seems to care about that one, we'll go on to the next one. If you have a question on a product, give a yell. Throw something out there, and I'll look at it. Oh, there's the the cable. Cable's perking along just fine. 1 week in a buy, not two like the euro below it, but 4 days in a buy right there. You can see that, and you can see J4X. That baby doesn't want to let go there, does it? It's moving up still at the high end of the range. Look at that. The three lines are moving north. Yeah, 54. What were you looking for? 111.20 on euro? Is that what it was Friday? Because didn't they just smack it? You got short position in pound at 124.20. Did it get that high today? Oh, we got to check that out. So today's high is where's today's high? 124.55. Oh, they took this puppy up, didn't they? Look at that. Let's see what it looks like in our Chicago quant. And there it is. It's trading at. So you've got a nice little profit going on in there, right? Right. Nice little profit. Now where is that one? Let's go like this. I move that over. There we are. I can go like that. There we are. And you see this is still lifting up, but coming down. Oh, you're going to trade it down to the 111.32 area. Oh, the euro. Yeah. You were talking about that on Friday. And look on J4X here. We were using that as an example, right? We were looking at. Here it is, right here. Where is it at? Oh, we're looking at cable. Let's go back to euro for a second. Right there. Yeah, so we were looking at this. What were we looking at? Oh, yes, there it is, right here. This area right here. This right here we're looking at, and those lows. And then like this high. So that was a smooth sell. That makes sense there. Now looking for, what are you looking for? Where are you looking for it to go down to? Or are you just going to take your profit and run? I myself would just take my profit and at least take half of your profits now. Take some do-re mi, and then use a stop so that it's not a losing trade ever. So in other words, above that. So if you reel some in with 35 pip win here, let's go back. Yeah, let's go back to the cable. Yeah, so if you reel some in here, basically, then you can put a stop in. Say you made 35 pips, then the other half or third or 2/3, make sure you don't give it away. You know what I mean? Silver gaining on gold again. Oh yeah, how many hit that one, Robin? I was skeptical at the beginning. Now I have seen the light. Is that the sun up in the sky? What light is that? Oh my God. I think I missed something here, but you mean the algo, the quant algo, and all that, or taking profits? Trust me, first profit taking euro 109, 600. Cool. I guess with a vacation. I tried calling you back on the tractor at one point. I don't know if you heard me or not, Robin. I was out there. I was out there on the tractor at as soon as the sun came up. I was out there on the tractor. I wasn't going to go with lights, but I was going to, as soon as the sun came up. Yes and no, the algo. Oh, yes on profits, no on the algo. or yes on and no on everything. I ran you over. No way, man. I'm always looking. Matter of fact, I found this cooking grade that was made out of stainless steel that I've been looking for I don't know, for like a year now. And when we have fires and we only have one side of it, they're like 4 feet by 4 feet. And I couldn't find the second one. It's stainless steel. It's gorgeous. It's like 45 years old. It looks brand new all the time. And I bought it back in '94. And I couldn't find the second one. And I saw the one they were using from the pole barn, and I was like, it's underneath a tree out here somewhere. Now seeing is believing. Yeah, well, we're gonna have you do a testimonial. You know, 54. Why don't you do a testimonial for that? Yeah, we'll get you to write something. It says 54 says. We can put it up on the Chicago Quant Technologies. You can say, I didn't believe it. I'm an electrical engineer. I only believe in real physical rules or something like that. And I've been watching Doc's work or the Chicago Quant algorithm, and it rocks. How's that? You want to do that? Yeah, there you go. Yeah, it's a. What's nice is that Dukascopy has allowed me to just keep on rolling with real markets about real trading. That's a really good thing. Talking about the real things like why people should be, why they shouldn't be investing like it's 1970, and they let me use to run the contests. I was doing the contests and winning contests, and Dukascopy's been really cool. I found it as I wanted to do a TV. I wanted to create my own channel, and you know what? Dukascopy's been a lot more fun to use as a channel. I get a chance to talk every day for an hour. Everybody can ask questions, and I don't have to worry about maintaining the channel, organizing it, making sure it works, the sound. All I do is put my headphone set on and go. So you tune in here, you get to talk to Doc and talk about the algorithm, and because nobody else seems to care. Successful things that work, no one pays attention, honestly. 54, it's the weirdest thing anymore. Look how much hullabaloo, how much false junk is up on the internet, and in Bloomberg and CNBC, even in the Wall Street Journal, they put junk in there half the time. I mean, they don't even talk about that. No one, every one of those things I just mentioned, they should be talking about options and value investing, and why aren't people utilizing the tools that are out there instead of playing like it's 1955? You know? And Dukascopy has binary options, and they do they bring in the options where it belongs. And Janos has done webinars talking about how to try to trade these crazy markets, and he's even discontinued the webinar because or the video or the YouTube of it, because he says it's even worse now than ever. And what do you see on CNBC and Bloomberg? They're out there toting the same horrible tools day in and day out. You were distracted? Did you see a butterfly go by? Was it a monarch? Yeah, I was calling you for breakfast. Calling you for breakfast. You want some breakfast? I mentioned you for breakfast. You want some bacon? So anyway, yeah, that's where it's at. You can see here, cable's interesting. It's and look at this solid move up. I guess when you look at J4X and you see those highs in the 26 area, I would imagine this could go after that area. It really could. I could see this thing going after 26. I mean, that's no math telling me that. I just look at the highs and figure everybody's following old-fashioned garbage. Can you shut my 3 positions off? Yes, I can shut your 3 positions off. Let me just do that real quick on live trading. Okay. Let's do that. No, that one's off. Let's kill the robot on 3 positions. Let's see, that one, that one, and that one. All right, the robot is off. There we go. Robot off on all 3. There we are. Okay, back to there. All right, so yes, what was I mumbling about? Oh yeah, just figuring that they might go after those highs. They'll play around with it. Yeah, I know. CNBC is terrible. I saw a quote from Bob Prechter about 4 days ago because I've been doing some research for an article, and he had an advertisement where I was doing the research, and he said that there hasn't been good technical analysis on markets and advice since the Financial News Network was bought by CNBC. That used to be FNN, then CNBC, and was there a Bloomberg back there? Yeah, there was a Bloomberg back there, and it was a radio channel at the time, I guess. And then he was saying that I thought that was really cool because I used to do Financial News Network every week or every other week. I used to be on the Google Review with John Bollinger. John Bollinger had a TV show, and he would interview me, and we would talk about the markets. So, let's see, where are we at here? So there's cable, and this is what people were chasing after. They go after these highs, and they go after the lows. They do all the simple things like that. But that's not the way you hedge a portfolio, because in this volatile world, ever since the listed options, they can blow through your stop, and you may not even have your stop out there. In other words, they can. In other words, if a brokerage, if you're doing it in stocks, chances are your stop is not in the 24-hour market; it's only at the exchange. So next thing you know, you wake up and the stock is $14 lower. It's like, what? It's only a $30 stock. How's it $14 lower? How did I lose? Over under a little, like more than 46% of my value overnight. Well, you did not insure the thing with a call and a put. That's how you did it. All right, let's head over to the Turkish lira. See what they're doing here on a Monday morning. Monday. Right there. They had a spike on that going up Friday. I was kind of surprised it went back into the daily buy. But it doesn't look too big here, Look at that. They spiked it up on Friday. They're firm here. And you can see on J4X, those lines are just driving hard and up. And you can see we are now a half a year in the weekly buy and 1 day in a daily buy. Unfortunately, 54, I think a lot of nouveau investors do. They watch Bloomberg and CNBC, and they read all these old books that talk about old investing, and they don't understand the volatility that we're in today. And when those books were written, well, a lot of those people were trading in an era where stocks went a quarter in a day. And some of those books, any of those books that were written, anybody using advice pre-1975, and any book that was written pre-1975 is the stocks did not move more than 30 or 40 cents a year, not a day, a year. If they moved 50 cents in a year, that was a big thing. And so, the New York Stock Exchange had a volume of like 1.5 million, 2 million shares back then when those books were written. People are trying to trade markets now where they trade 1 billion shares a day. There could be 5 to 6 billion shares are being traded here in the States between NASDAQ and the rest of the exchanges and New York. And, stocks can go up or down $5, $10, $15 in a day with not much of a issue. And not every stock, but, some stocks can get nuts like that on earnings, or someone forgot to stop dating their secretary, or they're dating both their secretary and their admin, who knows, or the chairman has chosen to do this or that. But in the end result is that the volatility is there, so you need to be able to hedge yourself. And the only way you can trade in this market is very short term with a really good tool, like what we show you here, and we recommend that you work hard and study hard and back test hard every day, or at least back test. You don't have to, not hard, but I mean you have to back test and make sure your work is working, and practice all the time. Nobody's playing in the major leagues, and they're not. They don't just show up on Sunday or Saturday or anything like that. They're training all week long. You got to do the same thing. And so we recommend that that's what you do, is train and practice all the time. And stop paying attention to anything written pre-1975. Because chances are they're about 99 to 110% wrong. I have a real doubt, PEs and inflation and dollar and liquidity and printing and all this other stuff they wrote about, that doesn't exist anymore. And so the money managers are now the only ones that are trying or are creating self-fulfilling prophecies. So they see a stock, they get excited, they think it could have great earnings, they all rush in because they all are following the old-fashioned investment concepts. And then when something goes wrong and the stock gets clocked, 4 months of profits all of a sudden disappear in one day, and they all sit around scratching their heads, it's because they're doing it all wrong. That's all it comes down to. They're doing it all wrong. All right. Anyway, that's the Turkish lira. It's been in a weekly buy now right there. You can see here. Let's see if we do it like this. It's been in a weekly buy now for 26 weeks. Tomorrow we'll put the weekly sell number in there unless someone needs it right now. Let's see. What else we got brewing? And then one time it was just like, what was it? Like the euro. No, like the British pound there. See how the British pound is 1 week in a weekly buy. At one time, Turkish lira was 1 week in a weekly buy. Now, our math reconfirms it every week. Every week a reconfirmation. And that's how it always works in trading. All right, now let's zip over to Canadian. Oh, Canada. Do, 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 do. Oh, still moving down a little, eh? I think we're in sells. Aren't we in sells? Yeah, we're in sells. That's line 20. We're 2 weeks in a sell. We're 4 days in a sell. You can see it went kind of walkabout sideways for a couple of days here. And you can see J Forex is buried down at the bottom there. And it's going nowhere. You can see the rate of change is trying to lift. You can see that the solid line tried to lift and is already curving down again. You can see the dashed line has not even bottomed. And that's slip sliding down. Let's take a look at that in the where is it at? Let's take a look at that right there on the the Chicago Quant right there. La 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 la. And you can see right there. Let's see if we can widen this out a little bit more. Tried to go to the buy on Friday, but just missed it by the hair, and it had the volatility signal there of the green and the red on the same bar, and then woo, it rolled right over again. Woo! I like making those sound effects. Whoop whoop whoop. On the trading floor on holidays, if any of you get a chance on, let's see, so when is the 4th of July? The 4th of July is the next holiday. One of the old New York Stock Exchange traditions. So the 4th of July, you can't see the calendar on there. The 4th of July is a Saturday, so they're probably going to give us Friday off. I'll have to take a look and see on the newsletter. But if they give us Friday off, then what's going to happen is on Thursday at 3:33 p.m., 27 minutes before the market closes, you're going to hear sounds. First around 3:32, you're going to hear whoop, whoop. And you'll just hear You'll hear like monkey sounds. You'll hear like animal sounds, but it'll be mainly whoop whoop whoop. And at 3:33, the whole floor will start singing away. You hear them going whoop 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 whoop. They make they make funny noises at 3:33 the day before a holiday, and that's why Doc makes that goofy sound once in a while. It's just natural for me to do. You know, when you're on a trading floor for a long period of time, you make all kinds of weird noises. You know, because you're trying to, it's a loud place. You need to, chill things out. All right. Anyway, that's enough of trading lore. Let's zip over to, but you'll hear it on the TV. You know, like CNBC has the New York trading floor on live. They have a desk down there, and all of a sudden you'll hear 3:32. You'll hear, or 3:31. You hear whoop, and you'll hear a couple of people go, and another person will go whoop. You know, they're reminding them that it's only 2 minutes away, and then all of a sudden you'll hear it'll be get like another minute will go by, and you hear like whoop whoop. And another person might do the same thing, just one or two. But then at 3:30, it gets nuts. Doc, American debt is at the highest, spending at its lows. Are they really spending any money though? Aren't they lending at all? Repercussions you see out there. If there's any repercussions, sell calls and buy puts. Who cares? Wouldn't you drive a car, right? And maybe it's a new car, maybe it's an old car, whatever, but it has insurance, right? If you go out the door the next morning and it's stolen, they're going to give you money to buy a new one again of whatever value it was. So do you really care? I mean, it's not like it's a 1955 Chevy, right? Blown with, Astromags on it or something like that. I mean, it's, don't you have life insurance? Don't you have health insurance? Just sell some calls and buy some puts. So what's the difference? It's irrelevant. It doesn't matter if it's in the euro or if it's in the cable or if it's in IBM or if it's in Apple Computer or whatever. Just insure it. There's no reason to be scared. None. So American debt is at the highest, spending at its lows. Any repercussions you see out there? Yeah, investors being stupid and not insuring their assets. That's the repercussions I see. That's what I see all the time. That's what I'm always whining about here. I mean, worst case scenario is you go sell a call, 6 months out, take that cash, maybe even keep a little for yourself, buy a put with it, to the asset value of your portfolio, and then you just go have a pina colada. Done. The Dow could go back to 500, and it wouldn't matter. You'd still have all your assets, minus what, 0.5%, 1/4%, 1/8%. I mean, honestly. I mean, there's the concept is so retro, 1950s. Any recommendations on what to buy? Puton for long. Puton? I was reading about baryons. Proton? Puton. Is that a stock? Let me go look it up. Yeah, I read it. Someone put out a paper yesterday about baryons. I really hate that stuff. God. And it's made of 3 quarks. Oh, put on. Oh. Any recommendations on what to buy? Put on for how long? Yeah, I recommend... No, don't be sorry. I recommend... I got baryons in my head. I've been thinking about the article still. Because I really hate quarks. I would... baryons are like protons. See, you're probably saying, what the hell is he talking about? And the way you spelled put on, my mind automatically picked up proton. Okay? And I was reading an article about baryons, and some try to make baryons are 3 quarks of a proton. Or no, was it baryon is equal to a proton? Anyway, forget that. Forget it. Anyway, let me answer your question instead. Yeah, yeah, I know. I can get out there. That's what happens when you're doing physics in the morning, and then you jump over to financials. Let me think. There was a good one for you. there was an now you got me on. There was another good article. I was reading another paper on Faraday. Where was it? It was Faraday and what was it? It was oh, I'm gonna find it for you now. Oh my God, you opened the door. Now you opened the door to that. But I'll give you an idea. I'll give you an answer in a few seconds here. But let me see if I can find the paper I was looking at when it came to the Faraday stuff. I think it was high frequency magnetic. Was it the dark matter? Was it? No, no, it was this. I think here it is. I'll find it. Here it is. What was it? It was that's a Hawthorne structure. A novel insight reveals topological tangle, and looking at Faraday and Maxwell, using it was some type of Faraday thing. I have to go back and find it. Anyway, I'm not going to go too crazy for you because I'm going to answer your question instead. But I'll find that. I'll find that paper. You might find that interesting since you're an electrical engineer. I'm sure you dig Faraday, and I'm sure you dig Maxwell. And so anyway, put. Let me go back to the puts. Any recommendations to buy puts for how long? Okay. First of all, if you have assets, stock portfolio of some form or equity portfolio or whatever type of portfolio, and you're nervous about it, sell a call and buy a put. That's just a flat out. Go about 5 months out. That's just normal, everyday, hedge yourself. Welcome to the 21st century, Now, when it comes to like trading a put, basically, let's see, what you do is you just take a look at the spreadsheet. See somebody that's like natural gas. Well, it's kind of low anyway, but was it the Euro Zolties in a 2-week sell, or the dollar ruble? But neither of them have any really decent options. CAD does though. Maybe think about pick up some puts in the CAD. It's moving down. But again, remember that thing we went through last week when we looked on J4X, how it was almost like an engine, where first it was the euro. Let's go back to that. We'll reintegrate this thing here. But I would say if you're going to play with puts, you would have done it 2 weeks ago with the CAD going into a weekly sell, and you could have bought a put spread. And so that would be like, let's see, where's the CAD at? Where'd we go into the weekly sell? We went into the weekly sell, on 2 weeks ago on the 22nd, right? So let's put the line in here. Where's the line? So that would have been the time to buy a put. Now, all you have to do is find some other product that we just went into a fresh weekly sell, and you buy a put spread. So let's put that there. There you go. So just want to move that over like so. Right there. We went into the weekly sell here. So, you could have bought a put spread at 140, and you would be 226 pips in it still if you had any puts left. You see what I'm saying? So it's not like there's two ways really you want to use options. One is you are concerned about your equities, or just you want to protect your equities all the time. And so what you do is you widen the strike price from your asset value. And so what you do is the best way to do that is to look at your portfolio, whatever it is, and then go out and sell like 5 or 6 or 7 month calls against it, and then go buy some puts with those cash. Try to do it for credit, and leaves you room for the upside, and you're protected on the downside. Not 100%, but like 98% or something like that, or 99, depending, right around there. And that's one way of using options. Okay. And then there's dozens of ways you can use options, but then there's the aggressive trading way, which is fine. You can go out and you can buy some put spreads when something goes into a weekly sell. That's what my math was designed for to begin with. I designed this. That's why I've been using it for 40 some odd years. I designed it for, well, first of all, I didn't design it for this. I designed it for dealing with Higgs boson, and that boson, and so that was what it was designed for, to not have to use a collider to find the same answers that a collider would do for the Higgs boson. Okay, so then I started using my math in the marketplace because I was on a trading floor and I could see the difference, and I thought, let's see if we can use some more advanced type of maths to predict physical direction, like Heisenberg uncertainty type stuff. You know, trying to figure out where and when, not just where or when. And so I did my options with my system, and my partners used to say, "How do you make so much money using so little money? Where we're using like 7 and 8 times more money than you, and you're making the same amount of money." And that's because I had a directional protect capability, and so they just said whoop whoop. So anyway, that was that. But so yeah, next time you see one of our products, let's say like the cable goes all the way up to 126, right? And then we get like it's like trading at 127 or 125, and it goes into a weekly sell. Then you buy puts. You buy a put spread. Buy something really dirt cheap. You risk like 15 or 16 pips to make like 100 pips or 150 pips, something like that. We can go look at a particular one. If you find a product that went into a weekly sell right now, up on the spreadsheet, and the only one I see there now is was it the Swiss spot went into a weekly sell last week, but it's 9 days in a daily sell. See that right there? Let's take a look at that on J4X. Where's it at? It's right below Canadian. Okay, so we go here, and we go take a look. There's there's Swiss franc. It's going up, going the wrong way. Fighting with Doc, and it went into a weekly sell Friday, right? So today is like all clear. Go ahead, be short. It's just beating me up. All right. Doc can't be right all the time. See that? Yeah, good reason to be skeptical for it, 54. Can't be right all the time. Only 8.5 out of 10 times. And so then let's put that in there. There it is. You can see it's not going up a lot, but it's, and we've been in a weekly sell since up in here. Where was that? That was in the 97. It's not that far away, really. 97.16 area, basically, a high of 44. So it goes into a weekly sell there, and then we start getting daily sells. And if you bought a put spread, I don't know, put out 12 or 14 pips for a 100 wide put spread, like an 8-to-1 ratio, just like my 8.5 out of 10. Right now you would be up 85 pips. See what I'm saying? That's how you do it. It's not complicated. It's pretty easy, actually. The spreadsheet really caters to it. And then so that aren't you going to give me like an epiphany thing? Like, wow, that makes sense. Aren't you going to do that? I invited you to breakfast. Aren't you going to give me a compliment? And if you say you weren't listening again, I'm not inviting you to lunch. So, all right. So anyway, that's the way to do that. So what you do is you look at something going into a weekly sell, jumping into a daily sell, boom, buy a put spread, really cheap for, well, cheap is defined by individuals, Doc, would you buy puts on the technology sector, XLK? This sector regained almost all of its losses. I guess if it went into a sell, let's go look it up. Let's put the Tech 100 up on J4X, right? And then we'll go look at that individual product there, since you're the only one asking questions. All right. There's the basically this is probably a cousin to it, and maybe what we can do is we can put it up on here. Where can we put it? Let's go to there, and then let's go to no, that's not it. Let's go to there, and then we go. Let's see, where do we go? We go to the stock side, right? So TVIX, we'll go with TVIX. Activate. And then we'll make a copy of this. And what we'll do is we'll put J4X's Tech 100 up on it, and then we'll put the XLK on it, and let's see the correlation. How's that? See that? See, if my mind's going to be hanging out on baryons and Faraday and Maxwell, I can easily get very creative with trading too at the same time. Now let's see. How do we do this? Let's see. Let's move this over. Okay. Okay, that's moved over. Let's move this down a little bit, but I want to be able to see J4X because I want to get see, there's the Tech 100, right? And then let's see, maybe I can do this. What's all this stuff? Let's shrink this stuff down for a second here. Format line. And what we're going to do is we're going to put let's see, it's up at 20. Let's go like this. Let's go all the way down to like 4. There we go. All right, now we're talking. All right, now let's first put in what you're looking at. What is that again? XLK. That looks familiar. God, does that look familiar? I must have traded it at one time or another. Okay, there we go. Let's see if it's in the machine here. X, that's XLF, L, no, there's no K. So add symbol. And then what we're going to do is we're going to throw in that Tech 100 in and see how that matches up with it. Stock X L K. Okay. Look up. We have a turkey farm that used to be not too far away from here, and every time I say look up, I always think of the goofy turkeys because the farmer that farmed it used to say to me, "They're the dumbest creatures I ever farmed." I used to say, "Yeah, I know what you mean." So it'd be raining out, and one would lift up their head and just stare at the rain and drown itself. I was like, "Yeah, I know." Because I have to make sure that they don't drown themselves out in the middle of the field. Oh, God. I think that's so funny. Every time I ever say look up, I always think of that what the farmer said. He just passed on too about 6-7 months ago. Just tried to buy one of his tractors. Yeah, a nice guy. Let's see now. Okay. Did I do that? Did I do it right? Let's do that again. Add. Okay. Okay, there it is. And close. There we go. Now, let's try that again. There it is right there. XLK. Let's see what that does. Let's see. Oh. Okay. There we go. So now, all right. And then let's put it in there too. And then what we'll do is we'll do a screen with NAS 100 and this and see how well it correlates together. But let's just take a look at it through the quant to start off with, and then we'll do an analysis with J4X on it. Close. Okay, so it probably looks a lot like. Oop, that doesn't work. Oh, there it goes. So let's go look at it this way, just real quick. So let's see. I mean, you can see here. If we put it there. So there's April, right? And there's March. Let's move this line over here. We'll line it up with March or something like that, with the lows, right? And I can move this down a little bit, like, I guess like that. There you go. I'm gonna move this over like that. There you go. So you can see it's pretty much correlated the same way. I mean, you can see the little down dip like right here on J4X. So this probably does match up to a great extent. And let's see if it's at all-time highs here. I don't think it is. See, it's almost perfectly correlated. It's probably, the same product there. I mean, just about, tech. Now, what was your question? Buy puts in it. I guess if we get into a weekly sell, yeah. But as you can see, we're not in a weekly sell yet. Okay, so what we can do is you can see we did try to go into what did we try to do? We tried to. I have to answer that. There we are. You can see we'd been pushing into a sell just like the way this was. You know, look at it. It was doing the same sideways stuff on the J4X on the NAS 100 or the Tech 100, and now it's lifting up again. But I would wait for the put signal. You know, in other words, you know, a sell. You know, we wait for a sell. You know what I mean? XLK. We'll look at it again tomorrow. Keep an eye on it. Matter of fact, we won't get rid of this. We'll save this. Let's go save this. And then what I'll do is I think maybe, let's see, we have a little bit more time. We could, if anybody doesn't care about anything else, we'll go look at this a little bit deeper. Let me create another chart. And what we'll do is we will put in the this thing here, the J4X one, the Tech 100. So now let's do this. We do copy, and then let's go over to my really short term. Where's it at? Right there. And then file and paste window. Let's put it in there. This is where my robots run. See that? There's 3 wins and then 1 loss right there. Alright, now the machine is thinking away. But I would say that it probably is very perfectly coordinated with this. I have to look it up. I wonder what's in the XLK. It sounds familiar. So it might be like, you know, almost identical. XLK stock holdings. Okay. Let's see what's in there. Oh, got it. It's called the technology sector. I mean, it's like just like, oh wow, did you know we're more than just tech fund? Okay, no. Let's see. It's add diversification with XLK. Let's see. Holdings. Here we go. I bet it's the same thing. I bet it's the high tech. Competing. Let's see if I can see the list of stocks in it. But I wouldn't be surprised if it didn't have the same exact thing that the Tech 100 has on J4X. Let's see, where is the stock portfolio? It says it's going to tell me what the stocks are. Come on. Don't do that to me. They bait and switch me. Tradability, PDF. Let's see what the PDF looks like. And I would bet that's the name. Oh, they want my email now. Jeez. Hey, I'll look it up. I'll find it. We'll find it and we'll go from there. But I would, you know, I would bet that. I mean, the charts look identical. I mean, look at that. If we widen J4X out a little bit more, like that, look at that. They line up perfectly. Look at that. The lows right there, the climb back up, the lows right there, the high. No, that's even further back. It's like this. I think it's like that. Is that it? That's it. That's it perfectly. Right? Right? If I move that over just a little bit like that. I think that's how it goes. Yeah. Yeah, I think that's what it is. And if I widen that just a little bit more, that's probably it. That's probably perfect. That's probably it. Let's see. That's 3-4 weeks back. Exactly. So yeah, you know, this way anybody who can't trade the XLK, they can trade this US Tech 100 off of Dukascopy's J4X at the same time. And you can try to do binary puts or something like that with it at the same time. Many thanks. Is that like many thanks? Okay. Well, I appreciate that. You're asking questions. I'm going to answer them. If I can't answer them, then I can tell you where to possibly go to find the answer. Let's see. Technology sector has gained almost all of it. Yeah, I saw a stat. What did I do? Here, let me tell you this stat. I was reading a financial stat. Please visit. Oh, yep, there you go. Nice one, Robin. Thank you. Let's see. Where is it at? Let me tell you about this stat I saw, which was really interesting. That this XLK in the high tech, right? I saw, where's it at? Right there. It showed. What was it you were talking about almost that? It said that where are we at here? Let's clear that up. Clear that. The general market is down about 8%. Okay. On the S&P 500, I believe that's what it is. But um, over on the see where's it at? I'm gonna find it in a second. I actually put it to the side here because it's very fascinating numbers. Oh, here it is. So the XLK, no, the top was it the FANG F. So Facebook, Amazon, Apple, Microsoft, and Google are up 15% for 2020. Okay, and the remaining 495 stocks in the S&P 500 are down 8% for the year. So that is a perfect example of this XLK for 54. It screams, it just screams of uh, you know that it's where the money's going. That's for sure. And you know what? Why shouldn't it go there? I mean, everybody's living off of Microsoft. Everybody's living off of Cisco systems. Everybody's living off of Intel chips. Everybody's living off of communicating through Facebook, and almost everybody is. What's there? 2 billion members of Facebook. Amazon has 25 or 30% of the market share of retail. What was the others? Apple, number one telephone, manufacturer, number one phone on the planet. Where people are ordering all these things from Amazon and talking to their friends on Facebook. Let me see. Microsoft. Again, people are at home. PCs, the whole bit, and then Google. It's a search engine, so it makes total sense. It represents our reality now. I mean, that's our reality, and that doesn't change anything. It's just so 15% up for the year. So XLK. I wonder where XL. I wish we could get it on J4X. God, that would be great if we could get it on J4X. But you can see here. Let me just scrunch that up. That's the XLK. You can see that the high was 10. It's like 102.82, and you can see here we're trading as high as 98. So we're only talking $4 off of all-time highs. That's all-time highs. That's not, that's nothing more than all-time highs. So that's pretty impressive, And you can see here on the J4X when looking at the same product, basically the same product, the Tech 100. It's being carried by that. Matter of fact, those fangs probably are on the Tech 100 are probably something like 60 or 70% of all the value of the Tech 100. I mean, I know that Apple's like 14 or 16% of the Tech 100, just Apple alone. And then I think that Amazon is probably like about 12 or 13 or 12 or something like that. And then Microsoft is the same way. So just those three alone is almost like 40% of the whole index to begin with. And then you got Facebook, and then you're throwing in there Google. So you got to figure that just those 5 stocks. Is it 5? 1, 2, 3, 4, 5. Yeah, those 5 stocks are probably 60% of this index. And if I found out what XLK was, all the holdings in it, more than likely it's the same way. It's probably the same. They're all using that weighting, So, all right. What should we call today? How about first look of the week? That's Giannis will tell me I'm being too general. So I've got to come up with something better than that. Let's see. How about puts and calls and Forex? Or puts and calls and value investing? How about that? I was whining about that at the beginning, besides making crazy New York Stock Exchange noises. Let's see. Let's try that. Title. All right, traders. So this has been Doc from North America. Tomorrow we'll get the weeklies onto the spreadsheet, and we'll go from there. So everybody have a safe and smart trading day, and we'll talk to you later. Doc saying like over and out.